everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today we will be talking about copper with my guest Eric Zuccarelli, who is an independent trader here at the CME Group in New York. Eric, thanks very much for coming on the show. I appreciate it.
You're very welcome for having me.
Let's just start out with sort of the big picture, if you will. Copper prices coming back a little bit from the March lows, other metals as well, gold, silver starting to come back. Do you think that's just a temporary technical bounce, or do you see something a little bit more to it?
At the beginning of the year, there was a lot of speculation that there would be a massive influx of material. They've been ramping up of various projects in the Far East and even in Chile, a major producer of the copper in the world. So far, that material has not materialized, and those people making those bets earlier in the first quarter, which pushed the market down, have had to cover them up, and that's why we've seen a little bit of bounce from the lows.
Now, even though copper has sort of been in the doldrums for a while, I mean, if you look at the price historically, we're still well above where we were, in the early 2000s, and certainly in the 1990s, where we were trading most of the time below $1 a pound. So we're in the $3 a pound range. Do you see prices mounting a comeback at some point to possibly new highs?
As new highs would put us about $5. That I really don't see in the cards. We could have a temporary spike about $3.40, $3.50 maybe if we get through the summer and we saw good, better numbers from China. We've seen some recent PMI prints that have been good. Industrial production figures have been good. So that is all to the plus side. The one thing that has been not a factor in quite some time has been the U.S. housing market, and we have seen some good data even just this week in that regard. And if we could get some real U.S. economy numbers that actually are substantial in terms of production and use of copper, that could be the one thing that has been really missing to spur demand on the United States and even Europe.
Yeah, clearly first quarter GDP negative for the United States, still concerns over China, although we're starting to see some of the data look a little bit more positive. If we get an improvement in second quarter U.S. numbers, would you expect to see more, speculative buying come into the copper market?
There is still the specter of this looming supply above the market. One of the reasons that supply has not come on is in Indonesia. One of the largest mines, the Grasberg mine, has been in negotiations with the government there. They have decided to put taxes or tariffs on exporting of copper, and therefore they have put a big force majeure, which is no copper has been shipped. That's a significant project of 300,000 to 400,000 tons, and that material is sitting on site. So that material needs to be refined. Normally it's shipped off into China and then refined in China. The Indonesians believe that they are shipping raw material, even though it's converted from basically dirt or rock into what is known as concentrate. They are not considering the concentrate a finished refined product, and that has caused a big problem there. They are coming up to have an election in July, so all the negotiations that have been done up and now, if the regime change takes place, we could start from square one, and that material will not show up, and certainly could put a little bit of constraints on the supply. Much like Chile, there have been new material come on with various projects there, and they are ramping up their infrastructure, but a lot of their ore grades have significantly been reduced, and they are having a hard time, even with new production, keeping up their targets. So there definitely could be some interesting situations with the supply side.
Let's talk a little bit about Chile, because I actually read an interesting article relating to a possible El Nino, which is a weather effect, and most people think about El Nino in the context of the grain and the agricultural markets. However, I read that historically there is a correlation between El Nino appearances and copper prices. Could you explain that correlation if there really is one?
Well, believe it or not, the weather would affect the Chilean copper production because you get major rains, and you have these monster open pit mining operations, which are literally a mile down into the ground. And with significant amount of rainfall, you cause mudslides all the time, and these monster material trucks and haulers get bogged down, and it does slow down production. So you definitely could have some issues because of the monster rains and El Nino.
Oh, good. I thought it had to do with anchovies off the coast of Chile.
Not quite.
Okay, well, as a professional copper trader, I mean, you trade this market. You've been trading. You're obviously very versed in the fundamentals. What do you consider to be the main drivers short term in the market? Is that sentiment, or is it technicals? Do people look for certain economic reports that come out?
Certainly the U.S. housing data is important, but for the last 15 years, my main driver is China. And as China goes, so will copper. Every time there's a little bit of a scandal, like we've had recently, this Qingdao dock issue in terms of their warehouse having fictitious copper, and maybe putting a constraint on financing into China, that certainly saw the market tumble from $3.20 down to $3. That has been moved to the back burner. The shorts have not seen any of the suspected material show up to the market, and we're right back to $3.15, $3.16 in less than a week. So what happens in China, whether there's monetary easing, monetary tightening, or even stimulus programs in terms of copper grids in the power supply, or even just building of these cities and copper tubing or white products known as air conditioning or refrigeration, it takes a lot of copper, and they do use it.
Do you think the market has been somewhat surprised, or let me say market participants, by the amount of drag that China has placed on the market? Like it's kind of been an enduring thing, right?
I would say copper in China is more the demand side of it, and you really have to see that they take a significant amount of copper in. So I wouldn't say that they would be a drag on copper prices. They would be the demand side,
Yeah.
and cause.
I mean, we're looking at like the weak economy in China.
Well, everybody has been betting on China to fall off that cliff for the last 5 or 6 years.
Good point.
I've bet against them every time and have been successful in those bets, and I'm not going to bet against China now either.
All right, well, that's why you're the pro, and that's why you're still down here. Eric, thank you very much. Really appreciate it.
My pleasure.
That's it for now, folks. This is Mike Norman saying see you next time from the floor of the CME Group here in New York. Take care. Bye-bye.